is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien today. Tom will be, I believe, back with us tomorrow, or it's only today that I'm setting in for him, so I think he's going to be gone tomorrow also. Now, the first chart that I posted, by the way, folks, those of you that don't listen to my show for whatever reason, you could have a lot of reasons, but anyway, what I am is a technical trader. I look at pattern recognition, swing trading. That's what I do. I look for patterns that repeat over and over again, and I trade those patterns. I do not look at the news. I don't care about the news. That includes anything, elections or whatever. I want to see how the market reacts to that news, but I really don't really care. Now, the first chart that I posted here is the chart of the E-mini S&P, which is basically the S&P 500. And as you can see here, we made a beautiful 382 retracement at 39.28 on Sunday night. And then we had a pretty big sell-off, as you can see, into those last 3 days, Monday, Tuesday, and down Wednesday. But we bounced a little bit on Wednesday, so we have a three-day move down. Not unusual to see a move up, but we've got Friday, and it's coming up here tomorrow, and it's going to be Friday in a down week, and that is going to be possibly very negative. The fact that that market took 3 weeks to make a 382 retracement is not a good sign. Now, for you old-timers that are there was a guy out here many years ago, Richard Russell, that used to talk about the Dow theory, and I wanted to bring up another chart that illustrates the importance of the 382 pattern. As you can see here, the high that we made, way back here, came down, up, down, perfect A, B, C, D, stopping exactly at the 382 2 days ago. But look at today, folks. We were down to this level right here, and yet the Dow Jones Transportations is still up. So we have the Dow Jones up today. We have the Transportations up today, but we got the NASDAQ down quite a bit. And then we also have the S&P. So that's what they call is a quagmire. So let's take a look here at a couple of those charts that we were just chatting about. I apologize if they're blurry, folks, because I don't really know why they are blurry, but the fact that they are is nothing I can do about it. Okay, now the chart you're going to see next is the NASDAQ 100. Let's get this up here, the one that's traded, known as the NASDAQ E-mini. And you'll see here that we've made it didn't make it this week. It made it the previous week. It hit the 382 retracement. And with that move, I don't know what that means, Al. Sorry, but you'll see that move topped a week earlier. So with the market going crazy to the upside on Sunday, and then also again on Tuesday when the Dow Jones made a new high, the NASDAQ never even came close. It couldn't even take out the highs of the previous week. And now you see that we are now trading below the 78% level right now, folks. And what's important is what happens here. You see this low that we've made today? This is extremely important from an options point of view. And let me explain to you why. Okay, we watch standard deviations. These are how the markets are, for these options markets are calculated, is using standard deviations from the mean. And if you take a look at this, you'll see that we are at 2 standard deviations down. Folks, look what happened when it broke 1 standard deviation, and this is 2 standard deviations, and we can't rally. my goodness, boys and girls, that could be extremely, extremely negative, because if that happens, the option traders that wrote the calls on this, someone bought a call and somebody had to write that, take the other side of it, that means they got to start covering in here. And that means that it's going to be pretty, excuse me, that was a put, not a call, because the market's been lower. Person that wrote that put, which is basically, long the market thinking it's going to go up, and that did the opposite. So he's got to go in and cover it. So that's why it's so very, 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 very important to take a look at that. But there's just so many things going on. I want to bring up the chart here to show you how important it is with that rate of the 10-year of the 10-year. Hold on, I want to get up here so you can see it today. The spike that it had in it. I mean, this is showing you that there was some really fear at one time. It's gone away right now, but look what happened today. We got as high as 5.3, folks. Just a few weeks ago, a few weeks ago, we were trading under 3, and a little while ago, we were back at 1.7. Here we are at 5.3. This is telling you that something is out there that's not telling us, is absolutely scared to the bejeebies out of them. That's the only thing I can understand that it could be, is that. So I really don't know what's going to happen. All I'm saying is, wow, there's some warning signals out here that we flat out better pay attention to, because these are screaming at, be really careful. Look at the action that we had in gold, folks. We've been trading gold from both sides of the market over these last few days. And, we hit this really nice area of support where we decided to cover the short and go long. And that's nothing more than that ABCD pattern that we look at. You can see it right there. There's your ABCD. We sold it up here at this level right here, perfect ABCD. Yesterday when the Fed was out there, we sold it right there. It went against us $3, and then broke today, and it made a little over $4,000 on the trade, which is, for a move of, for a move that quickly, it's really worth it's worth quite a bit. So that's why we like trading gold, because it has a sorry about my voice, folks. I got a frog in my throat and he won't leave. I've tried to put a princess out there to let him ski if he could jump out and get out of my throat, but he's not doing that. So you'll just have to bear with me here. We're having another spring here. I guess it's not a fall. It's the spring here because some of our trees have bloomed because of the water and the warm weather here in Arizona. And those Palo Verde trees, when they bloom, boy, they're beautiful, but boy, they're not beautiful to me. Okay, so let's take a look at something else here, and we'll keep a close eye on the time. We've got to pay a bill here pretty soon in just about 30 or 40 seconds. So if you have any questions, you can call in at 877-927-6648. By the way, tomorrow my guest on my show will be Jeff Hughes of Alpha Insights, and next week we got a whole bunch of great ones.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien today. And by the way, these shows are archived, so if you miss it, they're there on the website. All you have to do is go to it, and you'll be able to see, what's going on here. Now, some of the things that I think are relatively important today are the fact that we get this U.S. dollar chart up, because that's the one I think that is really causing all this. It's the movement of the dollar is extremely strong, folks. Let's just take a look at it here. As you can see here, we had this beautiful ABCD pattern here complete about 5 days ago, and then we exploded up to the upside. Now that should be a new chart in there now. I hope that that's being shown, and if it isn't, let me double check here just to change the window. I think this will do it. Well, I tell you, technical things just drive me nuts. Okay, anyway, now you can see the dollar index chart looking very, very strong, and that means that the euro and the pound has broken over 300 and some, actually 400 points from its high that it made a few days ago, and also the euro has broken well over $1,200–1,500 from the high that it made just a couple days ago. So the dollar is very strong. It continues that way. Now, if something happens that dollar should break, then that's something that'll be really, really very important, especially for the gold and silver markets, folks. I do not know what is happening with silver, but there is a lot of support around that $19 an ounce. And if you go to a coin store to try to buy, these silver rounds that are basically with the American Eagle and stuff, the pure silver, my goodness, they charge almost 80 to 100% premium, and they only have 3 or 4 or 5 in stock. They can't sell you very many. I mean, that's really unusual. Now, the other part about this dollar thing is the fact that the dollar is strong. That should mean that the gold is weak. And yes, gold was weak. Today it had yesterday it had well over a $40 break from the high that it made up there at 1672. The ABCD on that, the 61% retracement, came in at 1668. So you had about a $10 risk there, and it paid better than 4,200 to the downside. And now when we bought it down there, it's only up about $10–12. But the fact that it's doing it in the face of a really soaring dollar is just very, very strange. So that might be the first time that we've got a low in gold, because the low we made last night took out the lows of the last 3 months. And it didn't go anywhere. Remember that low we had down there at 1626? Well, we hit 1618 last night, and nothing happened. It started to rally. And so that's very, very unusual considering the strength that we had in the U.S. dollar. So remember now, everything that this is, Larry Pesavento, this isn't Tom O'Brien. So the things that I'm looking at here are all related to technical analysis. I don't look or listen to the news very much at all. I like to see how the market reacts to that news, but looking at it from a standpoint of you got to figure out what the fundamentals are, that just doesn't happen. I don't do anything like that, and I never have, and I never will, because I don't have several degrees, but they don't mean very much because I don't understand half this stuff that they're talking about these days. Credit spreads and all the other stuff that's going on. All I can do is I can look at a chart. And the chart tells me whether there's more buyers or selling. If the price is going up, there's more buyers. Prices are going down, there's more sellers. And that's what I need to know. If I see that, that tells me, yep, that's an indication that somebody that's a lot smarter than me knows what they're doing. And that's why I do these things based on this technical analysis that I really enjoy. Now, just to give you an example of how wild it got yesterday in the currency markets, and this is what I'm going to show you now is the euro. It's on a shorter term time frame, of course. I believe this was an hourly. Yes, this is an hourly chart here, and you'll notice here, you see this little spike right here where the market went right up to the 50%. There was your 382 retracement here, and it went another 30 pips higher to the 50% retracement, and then just literally, sold off the rest of the day, and it's still going down. So we've got a caller, my goodness, from Palm Beach, Florida. Jeff, what's up, my friend?
Hey, Larry, how are you, my friend? No, you're my friend. Oh, my goodness, you are the best.
Oh, I'll send you the $20. Just give me your address.
Just make it 10. I'll give you the address. Hey, Larry, the first question is, I have an oil question, number one.
Okay.
But my first question is, I'm an old, I'm not a GAN guy, but I kind of am because I'm a Tim Morgan. I think I talked to you maybe, 5 years ago about Tim, and he did pass away maybe, I think, 2 years ago.
Yes, I heard that, yeah.
Yeah. So he's the old Andrews Pitchfork guy.
Yep, I remember.
Yeah, and so my first question was, can we please, because I am having such a difficult time finding some of his old work on the internet. I mean, a lot of it's still taken care of by Rapid, a couple of things. Is there any way that maybe Tom or somebody, little Tommy, or the Boy Wonder can please put under your heading maybe, hey, we just had Mr. Tim Boss or the Wolf Trader, or under that way we can find it, in 10 years or 20 years from now, because we're going to really need that. We really are. I mean, I'm a little sentimental guy. I'm only, close to 65, Larry, and it'd be so much easier if we can find that in the history, maybe 10 years from now, or 2 years from now, or Rick Anderson.
That's a really good point.
Hey, guest was rich, or guest was whomever.
Well,
that'd be
all
awesome.
all of the shows here at TFNN are archived. They archive all those shows. So.
I know they are, but I have to I don't see, like sometimes you see, you see a headline, guest Rich Anderson, guest.
Yep.
Who's the guy out of Naples? He's awesome.
Norman Winsky.
Winsky,
yep.
Yeah.
He'll be our guest Monday. Yeah.
That would make it so much easier, and it's it is just plugging in a couple of letters, I'm sure. But something to think about. Maybe, hopefully, somebody's listening, and they can. Yeah. I'm probably not the only one that wants that done.
No, we have one other listener for sure. It's my sister. Good morning, Carla.
No, when we're all long gone, that'll be just great stuff to have in the in the YouTube archive if it's still going.
Yeah, I will. Hey, don't say long gone to me yet. I got a long way to go before I'm ready to leave this race. So I got 2 or 3 furlongs to go.
and we have the Breeders' Cup coming up this weekend, which is great.
Yeah, I have a horse. So I got 3 horses. They're absolute winners. If you want my pick 3, it's another $20. You know, the last time I had a winner was 1986. I had Ferdinand in the Kentucky Derby. Hey, Jeff, thanks for calling in, pal, and I'll pass that message along to Tommy Jr. and Tommy Sr.
Fantastic. Okay? Thank you, sir.
Thanks for calling in, pal. I really appreciate it. Bye-bye. Bye.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, Larry Pesavento setting in for Tom O'Brien today, and we have one of Tom's favorite people, Jim from Palm Harbor, Florida. Jim, how are you doing today?
I'm doing good, Larry. There's a pretty good-sized dealer, and they are basically sold out of eagles. They are paying $10 over spot to buy an eagle from you.
Yeah, I'm aware of that, yeah.
And so that's what's going on there. But what surprises me also with like the buffaloes or the gold eagles, they are buying spot. They are paying you 5.5% over spot to buy a gold eagle. They are selling at 10% over. So they're short on inventory if they're paying 5% over spot for gold. So obviously the physical is not tracking what's happening in the futures market.
That's for sure.
And my question now is, I'm really heavy in TBT. TLT surprised me that it did not go down lower and that the bonds came off the bottom. So that chart you showed earlier in the show, which was the 2-year that may have spiked over 5, I'm looking right now. Just the Treasury issued some 2-year notes on September 30th that were 4.25 that are now priced yield for 2 years at 4.75. Would you wait to buy some of those 2 years for nieces, grand IRAs, whatever? Or would you
I'm not. I'm not going to be. Here's my 2 cents worth for what it's worth to you, Jimmy. I posted the chart of the bonds just before you came on the air, and I'll post it again here now because I think we are getting ready to see. And I've been saying this for weeks, and it hasn't happened, but I haven't been involved in it, so it's not much of a big deal. But the fact that's what's happened so far. In these Treasury bonds, this last day or two, here it is right here, and you'll be able to see it. Let me blow it up so everybody can see it. What we had is a low back on the 24th. Here we are 10 days later, okay, and the news is basically out. Let's get this in here. Click the buttons right there, Chief. There you go. And because this is where you wanted where I took my stand. I mean, I took a little tiny one. But anyway, you'll notice if you watch here, this is like what you're looking at the TLT, okay? But the TLT hasn't even made a 382 retracement. So that's the first time that there's something's different. So if we take out that high that we just made yesterday in the TLT, I wouldn't want to be short because these markets are extremely oversold. I mean, that TLT and bonds, I mean, they've been oversold. Well, we've been bearish on them for 2.5 years, and we're still bearish. All we're going to see is a really strong rally. And I think it could be a really monster rally where it make it like you could run 7, 8, 9 points in the Treasury bonds, and it would still be extremely bearish. You know what I'm saying?
That's why I'm calling you, because I noticed the TBT and the TLT did not really.
That's the first sign.
The way I thought it would.
That's market feedback. That's what you want to look for.
So that's actually basically I've got my stops in on I'm on my TBT that I've been long for a long time. I've got my stops in at 34 3/4. I'll be very happy to take the gains that and book them and just. But you're confirming what I've looked at. TLT, TBT has not responded. Now those are 20-year, so it's kind of funky because it doesn't trade off the 30-year, it doesn't trade off the 10-year, and they're almost like their own animal, I guess.
Well, they're ETFs, and that's part of it, because they don't, I don't know how they structure these, but they get them to follow the what do you call the flat?
There is a 20-year Bloomberg index, but I can't seem to pull that up all the time just to watch.
I don't think it's not listed anywhere. It's not listed anywhere to trade, as I recall. It's just to give you the prices. So you have to go to the futures market or the cash market in order to get the prices. So keep it simple. Stay with the TLT. If it starts to go up, it's going to have a hell of a rally. That's what it looks like. If it gets above yesterday's high, and especially if it gaps above yesterday high for some crazy reason, you want to be long that, because the short covering in this vehicle, if it happens, it's going to be scary. And all I'm doing is I'm looking at how many people are talking about. Nobody's talking about a possible rally in bonds and notes. So that's when it usually happens. So keep an eye on it. If we take that high out, it's going to be. There's going to be some short covering coming in. Why? I don't know. Could be flight to quality.
Flight to safety that something else is going on too.
Yeah, if there is such a thing anymore of safety, but that might be the reason. I don't know, but that's what I see.
Well, I was explaining to some people that, the old days of balanced portfolio, 60-40 and stocks and bonds, and, people have lost 28%, 30% on the bonds the year to date, and they've lost 20% on the stock market, and people are hurting.
Yep, that's because cash is king.
Well, the market will always come back, and some people have lost some serious money trusting their financial advisor and not taking control of their own accounts.
That's my
rant for the day.
Yeah.
And last question, you started to talk about it. What is I know there's no such thing as a normal day, but you start trading out in Tucson at New York opens at 6:30 your time, right?
Yeah, I usually go to bed at 10 and I usually get up about 3. I get about 5 hours sleep, but for some reason, the last 2 nights in a row, I've slept a little bit longer. And so today I was a little late getting up. I got up at 4:30. I'm usually up by 3. And then right after the markets close, I take a break for about an hour, which I take a really good power nap. And then after that, I've got, great energy and, I can get ready for the videos and stuff. But, I got a huge problem, Jim, is this. I've been in love with these markets since the first trade I ever put on. Even when I'm on vacation, which is not very often, I've always got one eye on what's going on because it's like a magical game for me. It's something that I've loved and I've been able to teach people to do what I do, and it's helped them a lot. So I've had a great life. So I'm just thankful every day that I get up that I said, oh boy, I get to do this again. I'd rather do this and I don't like to play golf, but if I had a chance to play golf with Tiger Woods, I have a choice. I'd rather trade. If you want to know the truth.
I know what you mean, but I'll tell you, I know it's helped you out moving to that later slot.
Yes. Oh, yes. That's really helped me a great deal. I think a lot of people circle their calendar rather listen to you live than wait for the archive at night. Yeah, well, I'm going to get these archives up so you get them instantaneously. I've got to do that. We were fortunate enough to have our orders in yesterday on everything, and the markets went up to get our sale in the gold, and being short the stocks was the thing to do. But, there were a couple trades in there that I would have liked to have done. I mean, we had a 150-point swing in the S&P up and down, and boy, that you don't see that very often. And it was really on fire for sure. And I missed it because I was taking a shuttle to the airport, and when I checked, there really wasn't that much of a reaction until that 2:30 Eastern time. And I missed that whole move. So keep doing what you're doing. We really appreciate it out there, and you have. Well, I appreciate the call. Thank you very much. Wealth. Hey, now where is Palm Harbor? Is that just north of Fort Lauderdale? Just north of Clearwater. Clearwater. Oh my gosh. 26 miles due north of St. Petersburg, and it's amazing with, the hurricane thing, which would have been right up Tampa Bay, shifted again 100 miles south, wide right. Oh, well, so we ended up, air miles would be 140 miles south of Naples. We ended up with maybe 40-mile-an-hour winds and an inch and a half of rain. Oh, you were lucky. On this last one. But the people down south, south Sarasota, they got hurt pretty bad. Yeah, they did. Be well. All right. Thank you for calling in, folks. We'll be right back. Bye.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Oh dear. Okay, folks, this is Larry Pesavento setting in for Tom O'Brien, and I posted a chart of the German DAX. That's one of the big trading vehicles over in the UK and Europe. It's equivalent to our S&P, but you can see here it follows the same sequence of AB equals CDs. All markets will do AB equals CD because that's the fractal that Benoit Mandelbrot talked about, he being the father of fractal analysis, that everything starts with ABCD. You can see ABCDs all over this chart. The question is, which ones can you trade? And that's why we use certain patterns, and that's why we use certain ratios to match these patterns. This particular one, as you can see here, we have a double ABCD up here. We have the larger one and the smaller one all coming together. That usually means you're going to come off pretty sharply, and that so far is what's happened in the German DAX. Now, what we're going to do, since we're across the pond, we might as well take a trip over to the UK, and we're going to look at the FTSE, and this is a 4-hour chart that you'll see on the FTSE, and again you're going to be seeing the same type of AB equals CD patterns. Now the colors are a little different because what he wanted to show here was this potential. You can see those red marks. That is actually a head and shoulders pattern, because you see the right shoulder is higher than the left shoulder. Okay, and the time difference between the highs is just about equal. So that's a head and shoulders pattern, and that gave this rally that took us up to this level right here, completing the ABCD. And this pattern is called the Gartley. There's your X leg right there, your A, B, C, D, and that's a Gartley pattern. That was from H.M. Gartley in his book, Profits in the Stock Market, written in 1937, sold for $1,500. He sold 15 copies, I believe, and believe me, in 1937, you could have bought 3 Ford automobiles for the cost of that program. Now, stop and think. An automobile today for Fords runs about $35,000. And that would be like selling it for $100,000. He was equivalent to Edwards and McGee about all the stuff that he put out, but he was during that era. He died, and he was a young man back when he wrote the Gartley stuff, but he died in 1969 at the age, I think he was about 80-something, but his stuff in Wall Street was really, really heavily regarded during the 30s and 40s and 50s and 60s and 70s. So, well, he died in 69, so up until the 69, it was highly regarded. Okay, now let's move on to a couple other things that I think you folks could possibly be interested in, and that will be the Treasury bond and the Treasury notes. Those are the ones that I believe are getting ready for a very, very strong rally. Now, what I'm going to do now, we talked about the bonds before, so I'm going to bring up the notes here, and you'll see that we have been in this tremendous bear market here for 2.5 years. That includes the time when they were trying to tell us about negative interest rates way up in here. So, give your money to me and I'll watch it for you, but I'm going to charge you a fee and I'm not going to give you any guarantee that you're even going to get your money back. What a deal that was. And some people fell for it. But look, since this time, look at this, folks. We've been rolling over with these 382 retracements, and now we're completing this giant ABCD pattern right here, ABCD. And as the previous caller that was on, Jim, was talking about it, the Treasury, the TLT for the first time in a long time, which mimics this, by the way, if you would look at it, because it's got a chance here, because just a short covering rally here up into this area here is about $10,000 or $15,000. So that's what I think we'll have. We've had small rallies through here, and interest rates are going to go higher. There's no question about that. But this thing can also be involved in a flight to quality. And as you can see here, we're down here right where the target should be reached. So maybe a lower low should have happened yesterday, given the fact that they raised interest rates by 0.75, but nothing really happened. They held up relatively well. So get ready for that one. That could be a real interesting one. I'm watching it daily to see if there's anything that would, give me an indication. And today's the first indication when we went to the 78% level in the Treasury bonds and didn't go any lower. And the Treasury notes have held up well too. So that's telling us that there is something maybe not right, because the news is coming out and the market's not collapsing like the news says it should. Big interest rate increase, you would think this would be doing it, but maybe it anticipated it. But all I'm saying is we're getting pretty close to a really substantial bottom, a tradable bottom here in TLT and also in the Treasury notes and Treasury bonds. And it will be a short covering rally, because this is not a new bull market. Higher interest rates are here with us for the next 10 or 15 years, at least, maybe 20. Remember, we were in a bull market in those interest rates since 1984, yes. Actually, 82 was the low, August 9th, and we went up until just 2 years ago. So we've been going down for just about 2 years right now, and so we're due for one heck of a good rally in here. So let's keep in mind on your portfolios. Now, you're not seeing any increases in your savings passbook. I know you can be surprised about that, because the banks keep that money. In other words, they keep you at the high rates. You don't see interest rates on credit cards, all that other stuff. None of that is going down. That's going up. And so there's another reason that'll affect consumption, because, your value of what you're getting, if you could have bought a house, at 3%, now it's 7 or 8%. I mean, it's double the price. That mortgage is going to cost you twice as much. That reduces demand for houses. Well, the demand's going to be there, but you're just not going to be able to get it, because it's going to be too expensive. So because of interest rates, and interest rates will continue to go higher. There's no question about it. So let's remind ourselves of that. Okay. Okay, now I want to bring up a chart here of the E-mini S&P here one more time, and I want to talk about it because where we are is a very, very critical lever, and we will find out what happens here. Okay, now this level right here is just extremely important. That's the 39.28. That's the 382 of the high we made on January the 4th, folks. January the 4th. It's also a 50% retracement of the high that we made way back here on August the 28th. So now we've come down, and we've come down a couple of days here now. You'll see that all we've done is make a 50% retracement off the bottom, but the key level to watch is 3,800. If we can get above 3,800, that means we got a chance for a pretty good rally, and there's always a possibility that we could take this out. And if we do, then stocks will really go crazy. But right now, the information we've had these couple of days down, that'll tell us that, yeah, we're getting close, but no cigar, not yet. But it's working as we speak. It might not work all the time. And remember, it's not how much money you make, it's how much money you don't lose. Trading is all about controlling your risk, folks. Think like a slot machine. You're never going to beat it, but by golly, you can win once in a while, but that once in a while is not very often. So let's get back to commercials.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, and this is Larry Pesavento setting in for Tom O'Brien. The market is weakening up here going into the close, and so we'll see what's going to happen tomorrow. I posted the chart that we looked at earlier. This is the chart over the last couple of weeks of what Treasury bonds have been doing. As you can see, the low today was an exact 786 retracement, one of our favorite Fibonacci retracement numbers, along with 618 and 382. We've had a pretty good rally, and that may be the low, folks. Now, stop and think that the Fed has definitely raised interest rates, and yet the bonds did not go down and make new lows. And you can see that last low we made was well over 9 days ago. So there's a lot of action going on here in the eyes of the T-bond traders here. They have to be asked that question, what are we going to do to get this market down? Because if we get a short covering rally in these Treasury bonds, they're going to go a long way. Same things in the Treasury notes. I say that as a technician. I don't know anything about the fundamentals. I'm just looking at the chart. You see a market that's going one way all the time and then makes these patterns that we look at. They have to be considered as a possible trade. And that's the main thing that you want to remind yourself. It's not how much money you make, it's how much money you don't lose. On this particular trade, you'll have to risk about $1,000, but the reward will be somewhere between 4 and 15 times that amount if it's correct. So that's all you can do is to say, well, let the trading gods take over and see if it's going to win. I mean, that's all you can do. So I hope you get that idea across. And it's not how much money you make, it's how much money you don't lose. Take care of your losses, and your profits will take care of themselves. Just remember that. Very, very important. I believe Tom will be back on Monday, and it's always good to have the master in hand. So thanks for listening to me. Larry Pesavento for Tom O'Brien. Live every day in an attitude of gratitude, and may God bless.